Morning, everybody. Hope you are all well. Welcome to today's morning market. So what I wanted to do today is to really just think around morning markets yesterday, which focused on central bank policy in the US. But today I'm going to focus in on what is happening in Europe and also in Japan. So we move ever closer to peak interest rates. And most importantly, what does this mean for you and your money? Okay, so let's start with Europe, and as widely was expected, the European Central Bank, so what we call the ECB, raised interest rates by 0.25%. So if we look at where they are right now, the benchmark deposit rate is at 3.75%. And actually, if you look at the stats, this is the highest level of interest rates in Europe since 2001. If we look what else came out of the press conference, so just listening in to Christine Lagarde, so she's the president of the European Central Bank, the ECB. What were the key points? So some of the things she said is that policymakers had an open mind as to what the decisions will be in September and subsequent meetings. If we look at how investors have taken the comments that came through from the press conference, they really feel that she's hinting at a pause in the monetary policy tightening cycle overall. What's our take on the messaging? Well, as per morning markets yesterday, central banks are becoming ever closer to peak interest rates. What you're seeing is inflation coming down from the very elevated levels, although still elevated. And really, inflation needs to continue to fall for monetary policy to stabilize. What happened in Japan? Well, actually in Japan, what we saw is the Bank of Japan, the BOJ, they gave their monetary policy decision. So they decided to keep the key short-term interest rate unchanged at minus 0.1%, and that of the 10-year bond yields around 0%. But really the key change here is that they're allowing for more flexibility around yield curve control. So how did asset markets react? Well, actually, when we look at in Europe, you saw some dollar weakness, as you'd expect. So obviously, if interest rates are potentially not going to move higher, then you would expect some weakness from that currency. You saw within short-dated German government bonds, so 2-year government bonds, you saw a fall in yields. And then if we just move on to Japan, you actually saw quite a big surge in 10-year Japanese government bonds. So they surged to over 0.5%. So look, that's everything from me. Obviously a bumper week for central bank policy information. And what we'll do is we'll come back to you next week, as always, with our morning markets. Enjoy your weekend. Thank you.